What's going on, everyone? It's Sean from All Things EV, and I'm coming at you with another video. I've asked some friends of mine from RK Equity, Howard Klein and Rodney Hooper, to come on and talk about the early stage of lithium-ion batteries, lithium as well as other raw materials, to help us understand better a little bit more about Tesla's Battery Day and why they're putting so much emphasis on lithium and nickel. Rodney and Howard, welcome to the channel.
Thanks for having us, Sean.
I would love for you just to do a quick intro on RK Equity and how you got there, a little bit of your background, maybe 10 to 20 seconds of an intro. We'll start with you, Howard, first.
Well, great. I formed a company, RK Equity, about 20 years ago. I was introduced to a billionaire named Robert Friedland, who was in the process of making a discovery of a copper mine in Mongolia. And that experience, showed me from 2002 to 2003 how you can make a discovery and have a very interesting project and, bring that project into production and, make a lot of money for investors. So I've been focused on what I call public venture capital for early stage mining companies listed in Australia or Canada or in the US. And, I've been doing that for copper, in iron ore, in coal and gold, and in lithium actually for the last 10 years, having represented what is now Lithium Americas for many, many years, and Piedmont Lithium, as well as several other companies, the best projects that are helping kind of power this lithium-ion battery fueled supercycle.
What about you, Rodney?
So, Sean, my background was originally in finance, and then I ran a mining book in London in the mid-2000s for a few years, and then went back into financial engineering. I actually ran the derivatives desk for a big bank, and then about 5 years ago I went out on my own, started to do some analysis, looking at renewables and what the future might bring, and around that time I went down the lithium wormhole, as I always like to say. I haven't come out, and partnered up with Howard a couple of years ago, and we're looking to see if we can't leave some kind of a positive legacy in changing the world into a more carbon neutral.
Wonderful. Thank you too for the intro. Hopefully it gives those watching the video a little bit better understanding about why I asked you two to come on. I just want to say before we dive into a little bit more of the details of this topic, this is not financial advice. I had some people get really pissy about a previous video that I did or a previous post that I did online. This is not financial advice. This is used for informational purposes only, so please do your own research and make your own investment decisions based on that research. Howard, I'd love for you to talk a little bit about what things you were anticipating coming up to Battery Day. Were you surprised at all by anything that they talked about?
I wasn't so much into the prediction game other than kind of the million-mile battery everyone was talking about, but I was just a bit surprised that they decided not only to get into battery manufacturing, but also needing to get into cathode manufacturing and lithium hydroxide production. So those further upstream investments demonstrate that there's a severe bottleneck that Elon Musk foresees, not just in batteries. He wants to, he's in a big hurry to manufacture more batteries, get batteries cheaper. So the fact that we're in the lithium space and most of the lithium is currently processed in Asia in cathode factories. So whenever we were talking about where you're going to sell your lithium and reducing travel distances, it was, we were trying to attract cathode manufacturing. So we were thinking, where was Umicore, where was BASF, and where were the other major cathode companies in terms of making their investments in the United States, as we've seen SK Innovation or LG Chem, and Tesla. So it's fundamentally not a surprise, but it was a surprise because no one was really talking about that side, and no one was talking about, lithium hydroxide. So I was surprised and not surprised, but nobody was talking about this, and it's great that you're doing this, Sean, because the entire Tesla universe and community that watches this space doesn't pay enough attention to this upstream, materials that ultimately power and could be a major source of bottleneck.
It's really a fundamental part of selling electric vehicles, and I've used this example before in previous videos. But with an internal combustion engine vehicle, automakers can sell without needing to secure the fuel that powers the vehicle, the petroleum or the gasoline, depending on where you're from. But with electric vehicles, you cannot sell a unit without securing the fuel that powers electric vehicles, which are the raw materials. So it is a paradigm shift for the automotive industry to have to now think about this. And I don't think that traditional automotive are doing enough to secure those raw materials. Yes, you're seeing companies like GM secure joint ventures with LG Chem to do a gigafactory. But that's what Tesla did back in 2012 and 2013. So fast forward to today, 8 years later, now we've got Tesla starting to secure further down the supply chain and make sure that they can ramp up past 500,000 vehicles. So this is the problem that these automakers, these traditional automakers, will have in a few years. And for them not to do some things like what Tesla's doing, I think is very problematic. So the fundamental piece that Tesla seems like they're trying to address is this early supply chain bottleneck of, if they want to ramp up past 500,000 vehicles to 750,000, above 1 million, they're going to have to address this shortfall in some of these raw materials, 2 of them being nickel and lithium. The other thing that I think is really interesting from an environmentally driven company standpoint is this environmental impact of where these raw materials come from and how far they travel from mine to processing to going into the vehicle. Rodney, can you talk a little bit about what that process is like? I've seen some other videos from you too where you talk about the distance that raw materials travel just to get into an electric vehicle. Can you shed some more light on that, just in the event that people have not seen some of these videos?
Like other industries, the lithium industry wasn't developed to service the EV supply chain. It started out doing ceramics, grease, pharmaceutical, etc. So you suddenly had, a change in circumstances where now it was batteries that were demanding the lithium, and the low cost producing assets were already established, as were the cathode, because you already had the 3 C's of consumer electronics that had been built up from the 90s. So what you have is a change in, and also I guess from historically, one didn't worry, the world didn't worry about how much things moved around in order for products to be made. Now, of course, we're far more conscious. So you will typically have, either in South America or in Australia, either the raw finished product being shipped and moved around, then back to cathode, and then, heading off to cell, and then, into the pack, and then the vehicles being exported. But that's the infancy of electric vehicles. Now, someone like Tesla's had a look at this and said, how do we now reconfigure the supply chain but still achieve what we're going to? And ultimately, no one else was looking to do cathode in material size in the US. They see an opportunity to grow their market. One of the things I was looking for in Battery Day was the evolution of the high nickel cathode to make the semi and the Cybertruck profitable. So they've looked at it, they've made they made a concerted effort to say, how do we now collapse this supply chain into much shorter distances, but still keep the costs down? And that's what we saw on Battery Day.
So they emphasized on the cathode the nickel and the lithium. It appears like they're going to be sourcing these materials as best as possible from North America. I was delighted to see that specifically with lithium, they're focusing on the clay lithium out of Nevada and then the lithium hydroxide out of North Carolina. Howard, what are the differences between these two? Can you shed some light on why they're focusing on either these regions or these particular types of lithium?
It's a real question in my mind, how much focus, if I would use that word, is on clay. There was a lot of discussion about clay, but ultimately they said they have rights to 10,000 acres, and it's not clear. We did a video and how much time it takes from rights to actually kind of get into production. And today in the world, there's absolutely zero production coming from clay deposits that go into applications of any type, let alone that are qualified for batteries that go into an 8-year to 10-year warranty. And Elon's very concerned about safety. So he's focused on lithium hydroxide from proven spodumene sources, right? So he spent 20 seconds on that. He spent 2 minutes on clay. The 20 seconds were the most important, where he talked about a sulfate-free process to reduce cost by 33%. That 33% reduction in cost is not some new technology or innovation. It's simply by doing the conversion himself, or by Tesla's, they'll be able to lower the cost. Instead of buying $12,000 lithium hydroxide from a company like Albemarle, they'll buy, spodumene from Piedmont, at whatever fixed price, but they'll keep the margin for themselves, or in the form of a 33% reduced price. So he's picking spodumene to hydroxide because that's the fewest amount of steps to get to lithium hydroxide. It is the most scalable method and he needs to scale. He needs to ramp fast. So hard rock mines in Australia have demonstrated their ability to scale fastest. And Piedmont is a lookalike, to all the stuff that's in Western Australia. And then he wanted close proximity, so that's why he also picked Piedmont. It's in America. I think Rodney has some thoughts as to why he talked about clay. There are large resources and he has large ambitions. So at some point, 7 to 10 years from now, maybe the clay code will be cracked and the world's going to need tons more lithium. And so I think the potential for clay is there. I just don't believe it's a focus for the next 5 to more likely 7 to 10 years.
Yeah, the hard rock lithium seems like the solution for today, immediately, whereas potentially the clay, the lithium clay, is something that's a little bit further out, and they have aspirations to try and innovate that process, but maybe similar to solid state batteries. People get really excited and really sort of turned up about it, and it's just not ready for high volume production of vehicles. It shows a lot of promise, but it's just not ready yet and requires a lot more testing and validation. So Rodney, I'd love to hear your take on this as well.
Okay, so Sean, the one thing that I was really happy with Battery Day is it reaffirmed that lithium-ion batteries are here to stay. It reinforces the belief that we've had, is that lithium-ion batteries can get the job done, and make the EV revolution happen. So in terms of what Howard was alluding to, so 3 terawatt hours is what Tesla put out there. Give or take, depending on the cathode, you need about 2.5 million tons of lithium, of battery-grade lithium, and that excludes what they'll be using from outside suppliers. So when Howard says scale, you'd do a phenomenal job. You'd be bigger than any company in business now if you scaled hard rock to 100,000 tons. So that's just to put it in perspective. So yes, I guess they could. I guess they could even get to 200,000 tons, but you're still scratching the surface. There is some recycling that'll happen with production scrappage and so on, but you're still left with an enormous target. So what did Elon Musk need? He needed a silver bullet for a huge amount of lithium. And I guess clay, if you look at it through a certain lens would, realistically that would be your number. But I've listened to Albemarle. They have very similar thoughts to me. Clay is the lithium in clay is much lower concentrations than what you get in other deposits. So, aside from recovery issues, if you're not getting great recovery, and I laugh, someone mentioned about cations and dog irons, but liberating the lithium out of clay and getting decent recoveries off what is already a low grade means you've got to move a lot of dirt. And economically, that's proved to be a challenge. Albemarle's been looking at it for 30 years. But look, the one thing, that I do like, about and admire about Tesla is they're not a fixed mindset. This is a growth mindset. They fail forward and they move fast. And it will be interesting to see. There's also the question of high water usage. The one thing I'm pretty clear on is, how much of the entire Nevada desert is amenable to, the sodium chloride, extraction method. That's up for debate. It's, Albemarle even used the example of saying, there's enough lithium in the sea to fix the whole world, never mind America, but you can't get it out. So first principles, it's possible. Cost-wise, it's interesting. If you can't do it at ambient, temperature and atmospheric pressure, and you've got to start using autoclaves or high-pressure methods to do it, then it will be difficult to scale clay. But it is green, if you will, if you don't use, a sulfuric acid. But I've also said, maybe it's too simplistic, but if you look at the other clay deposits in Nevada and what they are looking at from an operating cost perspective and from a capital perspective, they are coming in at the potentially quite a low end of the cost curve. Tesla's saying they want to take a third off their lithium prices. So if we roughly say they pay $12,000 a ton and they want to get it to $8,000, the question now is, could they, with a more expensive processing method, still come in around the $8,000 or even $9,000? Because ultimately that's saving them what they're paying now from external parties.
A quick question. I think I'll kick this to you, Rodney. I'm reading the Piedmont announcement, and it says that Tesla and Piedmont have agreed to 160,000 tons per annum for the initial 5-year term. How many cars does that equate to?
So they haven't. They've agreed to roughly a third of the 160,000. I thought it was 180 was what they've targeted when I've looked previously. So my thoughts were it would be around 60,000 tons, which roughly would, with a little bit here and a little bit there, let's say 8,000, tons of lithium. So, that doesn't get you too far. You're talking about, what's that, 8 million kilos and divide that by 50. So what's that? It's 160,000 cars. Does that math sound about right? And then they have the rights to scale that 60 up to 120. So you could potentially double that. But again, this was my point to you is, they're talking about selling 20 million cars in 2030. So you've got to put it in perspective.
Sean, if I could just add to that, I think what's going on with the lithium hydroxide is similar to what's happening with their current battery plant, right? So they are building a 10 gigawatt hour battery plant, which they call a pilot plant. But that pilot plant is equivalent to the 13th biggest battery plant in the world. So their lithium hydroxide plant, I think, is they're going to start with kind of like a pilot of maybe 15 to 20,000 ton, what they call a pilot, but a 15 to 20,000 ton plant in the current lithium market environment is a pretty reasonable size. But I think they have aspirations to grow that once they've perfected that process very aggressively, to 50, 100,000, 200,000 tons, with a 10-year time horizon. So the Piedmont arrangement, right, gets them in business for this pilot. And you'll see it in, as well listed in there. One, it was a 5-year agreement with another 5 years on top of that, but it also said that they have an option on another amount, higher than the third. So I think they're putting Piedmont in business to some degree as they put themselves in the lithium hydroxide business. And as they grow, Piedmont will grow with them. But at the same time, they're going to source lithium hydroxide from their existing customers, Albemarle, and as well as new customers, for sure, for some time. And they may also source spodumene from other sources than just Piedmont. But Piedmont also has a plan to build initially 20,000 tons of lithium hydroxide capacity, but potentially 100,000. Again, with a 10-year view, there's no reason that Piedmont, through additional land acquisition, additional drilling, will grow their resource substantially, and they could have stage 2, stage 3 with their own resource. At the same time, they're in Charlotte, they're on the East Coast. They could import, from Canada. They could import from Brazil. They could import from Europe, and they could import potentially from Australia spodumene in the same way that, in the South, Tesla will do so. So I believe, if you're looking from a 2030 perspective, that Tesla Austin, here's a prediction, Tesla Austin, area will be producing 100,000 tons of lithium hydroxide, and North Carolina, Piedmont, or if Piedmont gets acquired or whatever, will also be producing 100,000 tons or thereabouts. So that's how I think we should look at this agreement, with Piedmont and Tesla. I think it's a win-win. Piedmont did not, give up everything to just have Tesla as a customer. I think they got a very fair price for their spodumene. At the same time, they have huge optionality, on the rest of its business.
So you think that the cathode plant will be tied to Giga Texas, or I guess now we should start calling it Terra Texas. You think that they're going to do that in Austin area along with their current aspirations for manufacturing the pickup truck?
I do. I mean, you heard him say wonderful things about Austin and between Oklahoma and Austin, where to work. I think you're from Austin, Sean, right? So yeah. It's a great place, and it's a low tax state. I think he prefers that over kind of California, and the southeastern United States. And these kind of, I don't want to get politics into it, but the easier places to kind of do work. And he talked about the importance, this really drove home when I was watching very, very carefully, manufacturing efficiency, right, requires close proximity and working capital management as well. So just having everything to move at highway speed as opposed to city speed in terms of manufacturing, you need everything kind of really close together. So combine that with the fact that he seems to like Texas, and it's you could find smart people there, and it's not overly high cost. I think it's highly likely that it'll be in Austin area, but he may not have. We should also be mindful that they just raised $5 billion. They just had 4 quarters of profitability and are generating cash. So for a long time, people in the lithium world and elsewhere were, where are the auto OEMs in investing, right? And we've been speaking to people on the Tesla procurement team for years who have recognized the bottleneck of lithium and nickel, et cetera, but it was always a competition for capital. He had to build Giga Shanghai first, right? He had to build Berlin. There wasn't enough money to go around. Now there's enough money because he's raised a ton, and he has access to a ton more if he wanted to. He could raise $10 billion tomorrow if he wants to. So I think the fact that he raised this $5 billion and in advance of Battery Day accelerated a lot of things that were already on the drawing board, and now he's executing them.
It appears like we're headed towards a lithium shortfall if demand continues to increase for electric vehicles. Rodney, My question to you is what Tesla is doing here with this lithium space and the nickel space as well, is what they're doing enough to help address this likely shortfall of lithium demand for electric vehicles?
So let's just be clear, even if they start turning soil tomorrow, I don't think that they can produce battery quality hydroxide by 2023. I think they'd be hard pressed to do that and qualify it. So all of the demand between now and probably the end of 2023, there is no internal production of lithium coming from Tesla, in my opinion. They've still got to pick the site, they've still got to permit it, then you've got to construct it, then you've got to commission, ramp, and qualify the material. So if they reach their sales targets, I don't see any other possible outcome than a shortage of lithium hydroxide by the end of next year and a fairly meaningful shortfall by 22. And then they can start tackling it from there. So, they can get to it, but, scaling, the thing is, when Tesla, for example, tackles a new battery design, they've got to overcome science. When you want to mine lithium in Nevada or mine, or leach clay, you've got to overcome science and you've got to deal with the Bureau of Land Management because they decide who and when you do things and at what speed, public opinion. You've got to have decent mine plans. You've got to explain how you're going to do it, not affect anything. If there's any buckwheat, lesser known spotted frog, anything of any type, they're going to stop you. So there are limitations as to, in the world of mining and chemical processing versus doing battery technology and car manufacture. So I think that, if you were going to put it in someone's hands, with a growth mindset like Tesla has, I'm sure they are going to make waves. I'm sure people are over discounting what they'll be able to do, but there are challenges to overcome and limitations on timelines and what can be done. So we think, looking out at the world, at all the forecasts, and remember Europe has CO2 penalties, emission penalties, so they are forced to effectively do EV penetration, otherwise they pay massive fines above certain limits. So there's going to be a lot of competition for what is going to be a scarce resource coming up, but longer term we'll see. Again, if Tesla reaches anything like 3 terawatt hours, I had 3 terawatt hours as the global forecast for batteries in 2030, and I had Tesla at about 500 of that. So I discounted their 1 terawatt previously by 50%, and I was more bullish on Tesla than others because that puts them at 1/6 of the market. Now they're talking 3 terawatt hours. So if you take that 3 and add the 2.5 that I had already, that's 5.5 terawatt hours. That's 4.5 million tons of battery grade lithium, including recycling. I'll give you that. And originally we said 2 million tons was going to be a challenge. 4.5 is, even with recycling, is an enormous feat to do. So what we're finding ourselves with, and I noticed looking at ARK Invest's forecasts of 35 million in EV sales in 5 to 6 years' time, we just don't have the EV manufacturing infrastructure ready to do that and raw materials to take that on. And even if you were going to get to half that number, you would end up having to actually develop and build projects that aren't that environmentally friendly and sustainable in order just to achieve those numbers.
The likely shortfall of lithium in particular seems like a huge challenge that I think Tesla is thinking about and foresees, but where are the other companies? Are some of these other battery producers like LG Chem and Panasonic trying to tackle these problems like Tesla is? And where are the traditional automakers at? And why aren't they doing more to invest?
Sean, that's a great question. That's a brilliant question, and I don't know if you noticed when Livent did their second quarter earnings, they said it's all voodoo economics, because if all of the EV companies were to go out and try and source their lithium today for 2023, they'd get about 15% of what they need. We're in this sort of strange period where there is a slight oversupply because we had a cut in Chinese subsidies in 2019 and we've had COVID in 2020. But further out, you know, a lot of the companies are relying. So what happens is the OEMs rely on the battery cell manufacturers to sort out their supply chains. They're now looking themselves a little bit closer, but historically they've simply outsourced the problem to the cell manufacturers. Whereas Tesla is an EV company, they can't outsource. If no raw materials, no product. So they've had to tackle it, and they've been on it for a lot longer than the other companies. But quite simply, you know, if I'm honest, I would say that we're going to see some casualties of some household names of auto companies that are behind the curve in terms of sourcing you know, a decent quality tier 1 batteries for their EVs, because they've been too slow in reacting to a changing world.
This appears like the remake of 2008, 2009, 2010 in the mobile phone market. It took Apple thinking in a completely different direction to really disrupt that phone market, which, if I remember correctly, was dominated by RIM, BlackBerry, and Nokia. And in hindsight, it makes a lot of sense. And people think, well, how could these large established companies not see that coming? But it appears like we're seeing history repeat itself with the automotive industry. And for people who follow it close enough, this is a remake of that same situation where some of these established automakers are about to be in that same situation. In my personal opinion, they're about to be in that same situation as RIM and Nokia were back in 2008, 2009.
So Sean, if you look at it, so the OEMs, the problem again, it's about a fixed versus a growth mindset. The OEMs try to defend their dividend, and they try to defend their most profitable models that they sell. And they didn't want to reinvest their free cash flow into what they wanted to dismiss, as they said EVs isn't real. I mean, even up until a year or two ago, you had some prominent guys at some of the major OEMs saying there is no demand, it isn't real. So now what you have is, and this applies to a lot of sort of tech companies that have stepped up over the last few years, is do you say, I'm not concerned about cash flows, what I'm concerned about is solving the riddle to make the conditions so that I absolutely dominate this market and I can produce it and outperform my competition, which is internal combustion engines. It takes a leap of faith, and a lot of incumbent OEMs at the time chose not to do that. Now the question is, now when you come too late and everyone, you know, are people prepared to back you to do it when there's someone like Tesla who's eating your lunch and so far ahead? Are you going to back that mindset to now catch up to a company like Tesla?
Yeah, I mean, it seems like at this point they can't afford not to. There is just, it appears like there's so much momentum that Tesla is gaining. There's broad appeal for their vehicles. Are there opportunities to improve the company? Are there shortfalls in the organization? Absolutely. And you know, I'm doing everything I can behind the scenes to help sort of fill some of those shortfalls, or help Tesla address some of those. But the most important thing is that they're selling vehicles and there are consumers purchasing them. Howard, my question to you is, what can other automakers do to make sure that they don't become the next Kodak, the next RIM, or Nokia?
It's a very complicated question. I mean, I'm somewhat empathetic to Mary Barra and American companies who operate in an environment of, they're constrained by their legacy businesses to a meaningful degree, and to their employees, and to, a federal and state infrastructure that doesn't, aren't aligned, right? Like, so the emissions, 22 states, I think, have different emissions. You have California here saying we're going to ban internal combustion engine cars. How do you manufacture for an American market? You can't really look at it on a state by state basis. So I'm somewhat empathetic to that. So I don't really know what the answer is on an overarching scale to, you have to take a bit of a leap of faith, like I guess Volkswagen's doing, and Mary Barra says she's for an all electric future, but how fast, the Ultium battery with LG Chem it seems to be a proprietary, product, but, it seems also a few years, behind where Tesla is. You don't have to be as good as Tesla to still sell, a lot of cars, but, so I don't know. They spend a ton of money on advertising. Tesla spends none, right? How they allocate capital and, design, I also don't know. They seem to have far too many cars, right? Even, Volkswagen and GM say we're going to roll out, 30, 50 different models, but how many different models do you really have to have, right? Yes, there are different segments, but so I really I'm just speculating. I don't know as a car executive, but from a resource standpoint, right, the entire industry is not profitable. It's still been reliant on subsidies. So, and there's such a relentless drive to lower cost. So if Tesla's asking their battery, their cathode, their resource companies, I want lower prices, it's hard for these companies to make profits and reinvest in these important ingredients across the supply chain. That's why Tesla, with a much lower cost of capital, with the money that they have, is able to and forced to do the job that a cathode and a battery and a chemical company might do, because the whole industry is not yet profitable. So I think Battery Day is a bit of a wake-up call across the industry. Like, I'd be scared if I was any auto executive just listening to that this means it is the end of the melting ice cube, as Morgan Stanley calls it, right? It's going to happen, and it's going to happen sooner than expected. Volkswagen seems to be getting with the program, and you're seeing partnerships. So they are, Volkswagen and Ford have a partnership, GM. So you can see a lot of partnerships across the industry. So that should get to cathode and hydroxide partnerships potentially from a GM, etc. So Tesla's a pioneer. So should GM, or with their partnership with LG, sign an agreement with Piedmont for a third of their offtake, and figure out how they're going to produce their own hydroxide? Very possibly. They got to figure out the cathode portion as well. But they don't have a team internally like Tesla has had for 7-8 years. I mean, Tesla's been talking about, buying into lithium or somehow being involved in lithium as far back as 2014. Does GM have a procurement team that are experts in, mining and metallurgy and chemical, thought process? I don't know. We can call this Teslandia. It's like Fordlandia back in the day when they had to buy rubber plantations for their tires. They have to kind of go back to that mindset.
Yeah, I think Tesla's certainly driving that conversation. The traditional way of thinking about things in the automotive industry is to outsource it and use third-party suppliers. Tesla seems to think completely differently when it comes to this, and bring as much as they can in-house for efficiency's sake and for more control over the entire process. I'm concerned in particular for GM and Mary Barra. If I'm sitting down at the boardroom table with her, I'm concerned that they're not doing enough, and that what they have done so far is very much a shotgun approach. The GM Nikola thing is one of those that just seems just so off the wall in not focused on the right things. I really hope that, to your point, Howard, that some of these automotive companies start to look at early supply chain as a fundamental part of their capital investments, because if they don't, and even if they just use their influence to create those conversations between lithium and nickel companies and LG Chem and Panasonic, I think that would probably go a long way. Maybe they're already doing it, but I'm to Rodney's point as well. I think there may be some casualties at some point here for lack of action on some of these automakers' parts. Let's go ahead and wrap up. I'd love for you to just sort of give some final thoughts to the viewers. Rodney, we'll kick it over to you since you've been patiently listening. Final thoughts on Battery Day and what the next couple of years looks like for the automotive electric vehicle market.
Sean, if you look at what Tesla laid out on Battery Day in terms of what the advancements and the performance and cost improvements over the next 3 years. My eyes are getting a little bit older, but looking at that screen, it looked like $45 per kilowatt hour at the cell level, and I guess let's call it around $60 at the pack level. I just read a commentary, and it's typically, one expects as volumes increase, etc., they can negotiate and have a sort of declining price profile with their suppliers. VW is aiming for sort of €100. Outsourcing is mostly to LG Chem. So my point to you is this: €100 is about 100, whatever it is, $10 per kilowatt hour at the pack level. So my point to you is, if Tesla doesn't absolutely execute on lithium or whatever else, they've already got this tabless battery, and they're aiming at 60. They can get some of the stuff right, not all of it right, and still be the market leader, because VW is second. And I think people need to understand that is regardless of what, of maybe not absolutely executing on each timeline, they're still going to be the market leader. So I do believe, looking at that biscuit tin or whatever you want to call it, that is a strong foundation for them to launch, to commercially be able to launch the Semi and the Cyber. And I think that, I mentioned it before when I wrote an article in March, is even being bullish is battery tech is exceeding even my expectations. So does that mean, with everyone, starting to see the benefits of EVs, that we're actually going to see a surprise on the upside, and then I guess the pinch points along the supply chain and production and EV production side will come into play.
Fair enough. Thank you for sharing your thoughts, Howard. A couple of minutes as we wrap up here. Lasting thoughts and impressions. What do we see here in the next year or two in the EV market?
I think Tesla is going to succeed, and I'm hopeful that Volkswagen, is going to succeed as they introduce their models, but, to be seen. But my greater, I guess, an important comment is there's a major disconnect. Tesla and Elon Musk talks about how undervalued manufacturing is in America, right? Even more undervalued is kind of mining and chemical processing. And it's reflected in valuations of companies that are in the market. So since Tesla's gone parabolic and since Nikola did their SPAC, there have been 10 other special purpose acquisition companies that have gone public. QuantumScape, right, has a 3.3 billion market value for something that very well may not work, right? And Battery Day was like not positive, solid state, in my opinion. But that has a huge valuation, whereas mining companies like Piedmont, until, a few days ago, were trading at, 50, 75, $100 million market value. So the public markets can actually help Tesla and GM build mines all across the world, but the valuations need to be higher, and investors need to kind of take these companies very seriously. And again, I said, I think earlier, it's very few people who manage to kind of like pick a company, that turns out to be right. In mining, it is public venture capital. It is hard, but some $30 billion needs to be invested in lithium alone, and probably more than that needs to be invested in nickel. And the commodity markets, the commodity equity markets typically follow the near-term price, and the near-term price has been short-term, depressed, but it's going to, the shortages and price spike, it's going to get complicated. So it's frustrating that Elon said he's going to give a giant nickel contract, right? But he didn't give anybody a giant contract. He said, look, I'm building, come and trust me, right? I'm going to succeed, build your mines. He did with one company, Piedmont, give a fixed contract for a short amount of time. So it's not a giant contract. It is a contract though. I think he and other auto OEMs may need to do more of that, but that's separate. I think the fact that, mining commodity equity investment is cyclical, and you had one SPAC in the rare earth space. MP Materials is merging with Fortress. This is a California rare earths mine that has a $2.2 billion valuation. Lithium Americas stock has started to, have a high valuation. So U.S. capital markets are starting to value, if you're listed in the U.S., starting to value mining equities, electric, vehicle material equities higher than in Canada and Australia. So I wouldn't be surprised to see more Australian companies and Canadian companies list in America, but I would just encourage your viewers, and the reason, I really appreciate you're giving us this opportunity, but the reason we're speaking to so much of the, call it Tesla intelligentsia, is to help them connect the dots of this need. At the same time, there are very significant opportunities, investment opportunities. Again, you're right, not financial advice, and we are advisors to Piedmont, so take that, with a grain of salt. But overall, I view RK Equity and what we do as evangelizing and trying to attract significant amounts of capital from institutional investors, from self-directed retail investors into these public equities, and we're a pretty good filter of which are the best projects.
Really, really great conversation, guys. I really appreciate your time. It's been super insightful for me. I mean, sounding the alarm on raw materials and significant investment needed for the raw materials that go into electric vehicles just seems like such an urgent thing to try and address now, today, not 5 years from now. So thanks for shedding some light on these items. Appreciate your expertise. And for those that are watching this, thanks for tuning in, and I'll catch everyone on the next video.